As a real estate wholesaler, I know the only thing you want to do is sell your assignments to cash buyers. What about if you can't find a cash buyer in a 7 to 10 business days? What happens then? Does your seller start getting anxious? Do you start questioning whether you're going to be able to close the deal or not? What about if I told you there's other options, financing, that could get the deal done and closed before your seller decides to get cold feet and walk away? So this week, guys, on the podcast, I want to talk about protecting your assignment fee, but also better yet, opening up a whole nother world when it comes to financing other investors that are not cash buyers. So let me get into it. Quick story. I work with several wholesalers today that do cash deals and they also do finance deals. And they were sitting on 3 properties that they could not get a cash buyer for, probably because the properties needed a ton of work. And the price they were willing to let it go at to protect their assignment fee wasn't matching up with their cash buyers. So they reached out to me and asked if I could help them get financing put together. So I actually allowed them to say, okay, we agreed that we would start working together, which they could actually start sharing my contact information out on their deals. So when there was a property that they could not sell to a cash buyer, they put my information out there. The thing that I did on my side is I put together a projected cash flow on the deal, whether it was going to be a fix and flip, a buy and hold, a bridge loan, whatever the case was. I gave them options because, again, I'm not in front of the property. Each investor has to make their own decision. But at least it outlined the process for the potential buyer to know that the deal could get closed. Realistically, as the wholesaler in the deal, they were worried about the same thing. Can I close the deal? I get that. And here's where I'll tell you. Within the first 5 to 10 minutes of me speaking to a potential buyer, investor, I'm going to know if he or she is going to qualify, just for the simple fact of, do they have the capital for down payment and do they have the credit score? Those are the only 2 things I'm really worried about. Everything else I can work through because they're more than likely going to close in a LLC, and we can work through docs, we can work through appraisal, and then go from there. But the one caveat in all this, and I don't say this lightly, as a wholesaler, you are used to just having somebody come in and pay cash. There's no appraisal done. There might be an inspection done, but in the end, there's no appraisal. Guess what? Lenders don't let you do deals without an appraisal. And if you don't have an appraisal, the deal doesn't get closed. And if it doesn't appraise for the dollar amount that you're looking for, then you have to go back to your seller, you got to go back to your buyer, and you got to renegotiate. I know that's a pain in the butt. I get it. I see it daily. Does it happen more frequently than I like? Yes. Being transparent. I would probably say out of 10 deals, I see 3, sometimes 4. And it's because these properties are very rough and the lender's just not willing to take on the risk. If the appraiser can't find enough comps to support it, he or she is going to go to unfortunately, the lowest rung on the actual bar. And when that happens, it just doesn't come in right. Back to the lender not wanting to take on the risk. They will take on the risk if the numbers come in. And if the appraisal, let's say you're trying to sell the property for 100 and the appraisal comes in for 90, they're going to make your buyer come up with the additional $10,000 to protect their investment. Or maybe you guys split the difference, 5 and 5. There are nuances, just like there's nuances with cash buyers. I'll let you know within 5 to 10 minutes of talking to somebody if he or she's going to qualify. We will know very quickly. And then I'll give you a straight up answer. No, I don't think this is going to work. You need to continue to go down your cash buyer list or find another finance deal. But in the end, cash buyers are so finite and so limited, they are going to slow your business down. How often do you get negotiated down with a cash buyer? I'm guessing pretty regularly. Finance deals, you might go back and forth a little bit, but not very often. If they can find the value in the property and it appraises for what you're looking for, they're not gonna worry about it. They're not gonna question your assignment fee. But the other thing in this, you're locking out legitimate buyers who can actually close. It's just through financing. So what scares you about working with a buyer through financing? Is it they don't qualify for the DSCR, which that's all based on the asset. So that's a problem. 2, are you worried that the asset won't appraise? Those are 2 likely stories that you probably tell yourself over and over again. So you need to tighten up your comps and make sure that you have the right value on the property to ensure that it appraises. Potentially, but if you get it right up front, you won't have any issues. You'll be able to move forward, get the appraisal done, it comes in at your dollar amount, and we get the deal closed. But if you are, unfortunately, I've got some wholesalers that really push the envelope on back-end purchase agreements with their assignment fees in there, and those values are extremely high. But DSCR loans are not a crutch. They're actual a tool. And not just DSCR. You have fix and flip loans, which are a lot easier to deal with if you're dealing with a dilapidated property. There's bridge loans. Quick purchase, boom, done. Typically, they're hard money loans, private loans, if you want to call them that. How does it hurt to advertise financing available? Is it because you don't want to deal with the influx of people potentially calling in and want to talk to you about that? Is it because you think these people are less qualified than a cash buyer? I read a statistic, and again, I have not fully vetted it. It says 85% of cash buyers are truly not cash buyers. They're using hard money loans. So what does it matter that a person comes in and buys a property, whether they use cash, through hard money loan, bridge loan, transactional funding, close? What does it matter as long as you're getting paid? So I'm trying to understand the stigma with DSCR, fix and flip, bridge loans, hard money loans. What's the stigma and why does it not work? Please leave it in the comments. I'd love to be able to hear your thoughts on that. I'll walk with you. I'll help you. I'll do whatever I can to get the deal closed. But you can't come to me at the last second and say, I've got 5 days to close a deal. I can't even get an appraisal done in 5 days. We would literally have to have the buyer pay a rush fee of anywhere between $100 to $300 to get that done in that short period of time. Appraisals are taking longer to come back nowadays. It's just part of life. But I will do whatever I can to help you guys, to close the deal, guide you, tell you the truth, be transparent as best as I can. And what I'm going to do is make sure that your assignment fee is protected and put on that ALTA/closing disclosure in the end to make sure that you're getting paid for all your hard work. But I need your help, and I need you to let people know that getting financing is not a bad thing. It'll grow your business exponentially. All you got to do is try it 2 or 3 times and see how we do. I'm willing to bet we bring it home 100% of the time. We've got a solid close rate. What I'm doing, like what I'm talking about, co-sellers, love to talk more about why you don't start advertising more financing in your deals. Stay safe, Stay healthy. I'll see you guys on the other side.